this is everything you need to understand about the candle range theory to trade it profitably. First thing to understand is that we focus on one candle. This one candle is a time-based candle, which we'll go through all the major variations of. Okay, this candle also creates our candle range high, which is main points of liquidity, and the low, which would in a sell example is the target liquidity. The candle range theory is a fractal model. If we notice a range being created on the monthly, this can also be extended on a weekly time frame basis. As you can see, this is our July candle, August candle, September candle, creating our basic 3-stick candle formation. Now, moving on to the weekly, we have all 3 weeks of a Monday candle, okay, from the 8th, the 15th, and 22nd, okay. Now you start to understand the time-based model of the candle regime. Usually this is disregarded when we actually trade. We usually focus on the price. However, the x-axis is actually what's most important, which formates our major time windows, okay. As you can see, monthly CRT with the weekly CRT. Moving on, diving deeper, now we have the weekly CRT, and we also notice in the same area of the previous sweep, which is right over here, we notice our daily CRT, which is denotated with the time stamps at the bottom, okay. And moving further, we then focus once again, understand this is a wick, and once again, our daily range, high, low, price sweeps above, 4-hour range, high, low, sweeps above, and then extends lower. Now that you understand the fractality of this model, you can now shift it to your trading style. Given that you're a scalper or a swing trader, I do recommend staying on the higher time frames. So anything below the 15-minute could get a bit dicey, given that there are a lot more candles to account for. Okay, now what have you actually noticed? The main commonalities. The entire range is based off of this one candle, our accumulation candle, which creates the main liquidity pivot points. And I name it as pivot points because once price reaches one area, it pivots and moves towards the next, okay, where we can see price within pivot and move towards the next, okay. And these are all objective liquidity, which I state as this because it is factored like this, okay. There is no indecisiveness given that is this maybe an equal high or trend line. It's solely based off of your 4-hour candle, which is printed by the market, okay. Now once price makes the accumulation candle, we then have the manipulation candle, which strikes the first area of liquidity, okay. And lastly, our distribution candle, and this will then seek to fill out the next pivot point. Now keep this in mind, this AMD accumulation, manipulation, and distribution can happen in 2 candles. As you can see right over here, accumulation candle, and this price candle was manipulating with this wick opening bullish and then later on manipulates and then becomes bearish, okay. Same to be said with this candle, okay. And you guys need more reference, please go look at our previous video where we go into depth with our one candle mechanics. Now as you can see, once again, we have price creating our accumulation range. Here's our liquidity range low and our liquidity range high. Price sweeps above and then finally starts to distribute lower. As you can see, here was the main manipulation phase and the main distribution phase, leaving this stark sharp candle. Now let's delve into trends. We have not gone on to this topic heavily. However, this is extremely important when you're using this to catch a lot of continuation moves. Firstly, this is what you've been taught that normal trends are usually like. However, this is very far from the truth. Normal trends like this all create liquidity, okay? And you do not want to be involved in that. Instead, you want to take advantage of points when price goes above a swing high in an area like this, okay, because this is a mandatory liquidation or even compulsory liquidation that price needs to go through to follow the order flow, okay. Think of it as price quickly driving along, it loses a bit of fuel, the liquidity, and then it'll quickly come back, liquidate, fuel up, and then continue lower. This is our candle range theory order flow. And as you can see, even with this uptrend, it's not just a simple trend line. We can see that price seeks these minor lows that are created with these candles, sweeps it, and then starts pushing higher. Another candle low, sweeps that. All of these are sweeps of liquidity, okay? Price is quickly fueling back up and then continuing the momentum, okay? And very clear, we can see this on the lower time frame. As you can see at this point, this can also be seen as our equal lows, but mainly it is our higher time frame candle range low. Price sweeps that and then continues higher. Another point, candle range lower, and then price sweeps higher. And if we can truly dissect into this again, we can see that price slowly accumulates, manipulates, and then distributes, okay? This is extremely important for our one candle mechanic, also coinciding with our candle range theory, okay? And as you can see, price continuously makes these retracements, but more specifically liquidations, to finally expand higher. And as you can see, once again, higher time frame, price is not just following a simple downtrend, it's following coherent parts of actually sweeping highs and then having the momentum to push lower, okay? And as you guys can now see, you can take advantage of these moves, okay? And I'll show you guys exactly different ways to enter and exit to maximize the potential of all your trades, okay? Now, this is the two ways of entry, okay? There are two more, but you can also find that in depth in the Novo Legacy, okay? However, these should get you guys by. It's our change state, break a block, and then we enter, okay? And the A+ ones are the Nano CR model, which you also link above for another video, and then we look to enter, okay? And as you can see, this is our first model. Once price comes and makes a sweep, as you can see, this was our first sweep. However, price then actually comes and manipulates once again. Now, I did do in a previous video on how to avoid these fake outs, but majority can also be pushed away by just waiting for an actual change in state delivery that closes below and for price to react of a previous breaker block. As you can see, this was a former order block that price pushed off of aggressively, keep wording aggressively with a major bullish candle, and then manipulated aggressively with a bearish candle to now stop out any breakout traders, okay? Once price does this, it pushes off this area and then stops above the high, and then our first target would be the opposing side of our range, okay? And for the legacy students, there are a few more steps that you guys should be inclined with. Now, this is our A+ models, and if you guys also want my exact checklist I use every single morning to enter trades like this, you guys can just go to the link in the description, and that's all for free for you guys to take advantage of, okay? Now, this is our lower time frame CRT within a higher time CRT. As we discussed previously in the first examples, we noticed a daily CRT within a weekly CRT within a monthly CRT. Now you take this knowledge and apply it once again, okay? Now, with your high time CRT, you wait for price to make your sweep, and then also notice it's another lower time frame candle range being swept, and then price distributing. That exact point is where you'd look for to enter, okay? Either once price breaks below or within the equilibrium of that candle range. And as I said, a few more steps for our legacy members, which will be in the community below. Now, this is by far the most important thing that will skyrocket your coherence with this model, okay, and strategy. Now, the candle range theory can majority of the time be applied to every single candle. However, we're not able to trade every single candle. So what we are looking to do is to find the key CRT sweeps and focus in on those ones, okay? Now, when you're using, okay, the 4-hour time frame, this is the main higher time frame we as a Novo Legacy use. But as I said, you guys can extend this higher. And if you guys want to test a few more time frames Going to the community, we have a ton of market researchers that we can delve into more data testing for this model. Okay, now, but just using our high time frame candle, okay, you would understand we have either our 1, 5, and 9 a.m. candles, okay, and then those also become your 9 p.m., 5 p.m., and 1 p.m. okay, but we focus on the AM candles as this is within our pre-market opening and our first hours of the trading day and our midday consolidation. And you guys should understand these are major New York times, which we see major volatility on our NQ, Nasdaq, gold, and a lot of other pairs, EURUSD too, okay, and these are also the main pairs that we trade. Okay, now when our pre-market open is from 8:30 to 9:30, that's our prime sweep to occur. Okay, they also have our first hour, which is 9:30 to 10:30, and then lastly the midday consolidation from 11 to 1 p.m. As you can see, for our time frame, 6 a.m. candle. Okay, now given around some brokers, it does show either 159 or 2610. Keep this in mind. This is a very important tip. Now, this could be your 6 a.m. or your 5 a.m. But as you can see, there's your candle. Now, you want the sweep to happen at exactly 11 a.m., which is your midday consolidation. And you can see very high time for price to actually create a major manipulation. Okay, it firstly caught out all the breakout traders of the previous candle range and then manipulated at exactly that time. And as you can see, that's when you want to be entering. Okay, price changes state, break a block, enter your trade, stops below the low, and then you target the opposing side of the range. Okay, or on your 50-minute time frame. Now, when we use our 1 a.m. candle, okay, and as I said, if you guys want more information on exactly on this, I made a full entire course from beginner to advanced on the candle range theory, as well as I've left a ton of free PDF resources within our Discord community below, okay, which you guys can access right after this video. Okay, now with our 1M, we're gonna focus on our London to going towards the New York session. Okay, so using 1M candle, you want your liquidation slash sweep to happen around either the 3 a.m. to 5 a.m., which is your London open, where there is increased volatility within 1 a.m. for our range, or your pre-market, okay, or your post NY. Now, as I said, this is all dependent on your current lifestyle. Okay, I know a lot of you guys may be trading part-time, given that you do have a full-time job and then using trade to supplement. Okay, so if you're working at a different time, take advantage of these. Okay, so these are very important times that you want to be focusing. Okay, so if you can't trade London open, trade pre-New York session, trade New York session. Okay, I'm doing this so everyone is able to take advantage of this. Okay, this is everything you guys need. Okay, now as you can see right here, another example, this is our 1 a.m. or 2 a.m. candle, and price does our 2 candle AMD model. As you can see, even though we had the first sweep here, price didn't really truly start moving until exactly within our 7 a.m. to 9:30 range, which is 8:30. Okay, now this is another very important tip. Make sure that you have your time set to UTC -4, or more specifically New York time. Okay, right now there is daylight saving, so do also accommodate for this. Now, when we use our 9 a.m. candle, okay, which is from 9 a.m. okay, or your 10 a.m. bar candle, you want your sweep to happen around your 10:30 mid-morning session, or your lunch hour sweep, or your power hour sweep. Okay, and if you guys also want the full presentation I created for you guys today, this is also once again linked in the community. Okay, but the most important one are our 10:30, as this is exactly our New York open volatility time. Okay, now right here, this is showing you an example on stocks. Okay, this are for our 10 a.m. candle. Okay, and we have price sweep. This is our 3-stick candle AMD model. Okay, now when does price actually sweep this point? Okay, this low point at exactly at 4 p.m. Okay, and what time frame is that? Correct, our power hour sweep. Okay, and as you can see right then and there, price then starts to quickly come back into the range. Okay, change the state slightly, okay, and then finally impulse off that breaker block and then extend to the opposing side, okay, and then finally reach the TP. Now that I've shown you guys how to specifically enter these trades, when to enter them, now lastly, to give you guys the full entire trading plan, it's where do you target, okay. Now the easiest point is just targeting the opposing side of the range. However, as you guys continue to trade this model, you'll realize that you can actually take advantage a lot more on your trades, okay. So these are my predefined levels I've trialed and tested, and as I said, I've already done numerous backtesting videos and data I've shown to the Nova Legacy of when I was testing the levels, okay. And these are sort of like your standard deviations, but are specifically nurtured for our candle range and mastery, okay, even our candle impulse theory, okay, CIT. Now, if you're within a bullish scenario, okay, and you're looking to buy, you want to draw your Fibonacci from the most recent structural high to your most recent low, okay, where the sweep happened, okay. So price would have swept right around down here, and then that's when you want to place your Fibonacci level, okay, and then it will extend and show you your 127, your 17, and 214, okay, and these levels all go beyond just the opposing side of the range where you would originally target, okay. Now I use these ones depending on what is my trade exposure, okay. So if I see that this trade is all within a discounted pricing, I'll be targeting out 214, okay. However, if this is a continuation model and price is still continuing off of a previous trend, I'd majority of the time target the 127 or the 17 level, okay. And as you can see, this example of a reversal pattern, price was well into premium, okay, and then we also had a candle range with the high being swept, price creating that change state delivery, okay, right over there, and then enter with the break block, and then instead of just starting right over here, we would have ended with around a 122. We extended to go to the 1.7 level of our Fibonacci Nova deviations, and then we got a lot more out of that trade, okay. And I also trade this exact model live with the community, so you guys also want access to that. It is also in the link below, okay. And I can see we draw this from the most recent structural low point to our most recent high, which is where the sweep occurs, okay. So start from there, draw to there, and then it shows you your extensions, okay. Now that is completely everything you guys need to know to trade the candle range theory, okay, from beginner all the way from identifying what candle at what time, how to enter, and how to target, okay, with this exact model. And even more, I'm leaving you guys a special checklist, okay, that ranks each and every single CRT, okay, so you're never confused, and you know I'm entering on a high probability setup and a low probability set, okay, which can help you guys on scaling your accounts or even getting yourselves funded, okay. Now that you guys understand the entirety of this, if you're wanting to learn more, as I said, there is also a full-on course I've already compiled for you guys. If you guys are confused at any point, do also make sure to book a free one-on-one call with me so we can dissect and look to improve this model, especially catered towards you. Okay, so let's do a quick example for you guys. This is our time frame, and this is our 6 a.m. candle. Now we mark out the candle low and candle high. Now coming into this, we want to go around the 15 time frame. I can already identify that we have done a sweep, which is also within our key time frame as it happened at 10:15. Next, we go down to our 5-minute time frame. And as you can see, we already did create a change in state of delivery once price fully broke above this point over here. And now we need to identify a break block, which is this one that we can use right over here, okay. Given that we are below this, we can just wait for price to fully inverse this area and then go to the upside, and then we enter a trade to target the opposing side of the range. I can also see that now price is starting to come back to our point, and now we are triggered into the trade. You can see even though price is consolidating, it is still stuck within this main range. And there you go. So as you can see, that was the full trade. It did take a bit of time, but as you can see, once price finally reached that target area, now price is starting to pivot once again to the opposing side of the range. And once again, once it reaches the low point, it then again pivots. Now, going back to our 4-hour time frame, we take our 4-hour 6 a.m. candle or 5 a.m. candle, and we mark out the high point and the low. And then we go down to 50-minute time frame. As you can see, on the 50-minute time frame, we identify our sweep has occurred within our 10:30, okay? Right there, price swept at 10:15, and then we had our change state at 10:30. This is also within our first hour time frame, okay? For when we're using the 5 even candle range, okay? Now this is very good. So we're going on to the 5-minute time frame, and we can also understand once price breaks above here and closes above this point, we can then identify our change in state delivery and then enter off of the breaker. Okay, price is pushing off here, and then this candle does close above, so we can just enter right over there, stops below that low point. And now our normal target would either be our candle high point or even the equilibrium of this candle. However, it does not give us a positive RR, so what we'll be making use of is our Fibonacci deviations. Going from the most recent high, structural high, to our most recent low point that created this sweep, we now have our deviations, which we can now look to extend, okay, and even further. So we'll just go in between these two levels here, okay. And you should also be noticing that on the 4-hour time frame, price is just yet again printing another 4-hour candle. And these usually do take a bit of time because price usually likes to accumulate and manipulate within that same range. And now we can see that we're finally reached the first general target, okay. Also on the 1-hour time frame, as I said, candle range theory is fractal. So even the 1-hour time frame formates our range. Price sweeps the first pivot point and then goes towards the next. It would be good to close a bit of your profits because now we have also reached another pivot point, but we are also following the general trend. I can see price then starts to pivot at this point, okay, but let's keep this trade going on. Now, as you can see, price does eventually come to your TP. Now, very important that, as you can see, even the pivot still would have given you a good return rate if you're looking to trade that opposing side of range, okay. And there you go. Now you guys understand everything you need to truly trade this theory. You still need the action that comes with it, which is why I'm hosting the 30-day execution training challenge for the entire Nova Legacy, which you guys can join below. It's completely free. It's me and the team trading with you guys every single day, honing your craft on both candle range theory and other candle range mastery techniques, which at least you guys get a full scope of live market data, so none of this just stays an insight, okay. And that will be in the link description. Now that you guys understand